Wall Street kicks off September on a sharply lower note as investors weigh the future of President Donald Trump's tariffs after a federal appeals court rules most of his sweeping tariffs illegal. Trump decides to move Supreme Court. Asian markets mostly trade with cuts, tracking Wall Street cues as investors assess the latest developments on trade. GIFT Nifty indicates a muted open for the Indian markets. Oil prices inch higher as after U.S. imposed sanctions targeting Iran's oil revenue stream. Gold prices, meanwhile, surged to an all-time high amid the lingering political as well as economic risk. Long pending rate cuts on the cards as the GSE Council's two-day meeting starts today. The centre remains confident of a smooth passage even as state raises concerns over possible revenue losses. India is in a dialogue with the United States for a bilateral trade agreement, says the Commerce Minister Piyush Goyal. He also hopes things get back on track soon to conclude the bilateral trade agreement by fall or November. Hello, good morning. You've tuned into Power Breakfast on CNBC TV 18 and I'm Vinny Motiwala coming live from the Mumbai News Centre. Yesterday, what we saw in terms of the Indian markets and the Nifty, opened up, saw a green, went to the day's highest point, 24,600, above that mark, way above that mark, and then that correction came in, and again, Nifty closed below that. But today, what we're watching out for is going to be the cues that are coming in from the Asian markets as well as the Wall Street. Let's look at how Asian markets have opened up this morning. Most of our have opened up in the negative territory, like whether you look at the ASX 200, Nikkei, Shanghai are trading in the red. Now, what is holding on to that green is Taiwan Index as well as Hang Seng. That's managing to hold on to very strong gains, right? 0.9% of gain is what we're watching out for. But other than that, everyone's watching out for commentary that's coming in the global front from Trump in terms of the concerns for tariffs that continue to weigh on the market as well. Taiwan Index as of now, slight bit of a gain. Hang Seng, that's the one that's outperforming, right? Because other than that, nothing is managing to hold on to gain. Indian markets today, the Nifty implied open, that is also not indicating a positive start for us. As of now, it's down 50 points. So we'll be keeping an eye out on that. But that's the Asian market skew that we have. How is all this going to be impacting our Indian markets? What are we expecting in terms of an opening coming up? F&O, SINs and stocks to watch out for in today's trade is what we're watching out for. But before I go to anyone else, let me start with the trade setup that we're watching out for in today's trading session. U.S. markets, when you look at that also closed in the red, right? They started this month not on a positive footing. We also have a lot of commentary that came in. One for Google. That's the one that was buzzing in after hours trade for the U.S. market after a federal judge had ruled that Google can now keep its Chrome browser, but it won't be allowed to strike exclusive search deals. But nonetheless, Google managing to hold on to gains after that. There was a spike that came in the bond yields in the U.S. market. 10-year treasury yields, they jumped to 4.27%. So that is also important to keep an eye out on the yields because the yields globally are seeing a rise coming in. Now, obviously, we have a lot of commentary that's coming from Trump overnight as well. So keep an eye out on that. He's gone to the Supreme Court saying to expedite the ruling on tariff appeal. So that is something to watch out for. And most of the other statements is something that he's already spoken about before as well. But a lot of commentary that's coming from Trump that is keeping the market a bit uncertain. And that is why a muted start is what we're expecting from the Indian markets. But let's move on and go across to Gaurav, who's here to tell us which are the important stocks to watch out for in today's trading session. Good morning, Gaurav.
Good morning. First, let's talk about TCS. Now, company has got into a partnership with Trig for $550 million deal. Now, this deal will go for the next 7 years. Remember, this company has been partners with TCS for the last 12 years already. Adani Power, it is also in focus because they have received approval to commence its facility at the Rauli mine operations. It will have peak production of 6.5 MTPA. PNC Infra, this company has been announced as L1 bidder for one of the projects from Airport Authority of India worth 297 crores. Indus Towers is also in focus today because company's board has now approved to foray into international market. They will be beginning with African markets, specifically from Nigeria, Uganda and Zambia. When we talk about DCM Shriram, this company is in focus, and the reason being that company has entered into a long-term partnership with Aarti Industries. They will be exclusive supplier for chlorine for one of the facilities which is situated in Gujarat. E2E Network, now this is also in focus because they have received an order worth 177 crore rupees. And what is special about this order is that this order is specifically for the India AI mission. So definitely this company is in focus. Moil actually came up with their monthly update where we saw the manganese ore production actually increasing almost by 17% on a year-on-year basis. JSW Cement, let's talk about this company because company has reported its Q1 numbers. When we look at the numbers, net losses widened to 1,362 crores versus what it was at a loss of around 15 crores on a year-on-year basis. And lastly, let's also talk about Zomato because they have increased their platform fee almost by 20% to 12 rupees versus what it was at 10 rupees. So definitely all these stocks are going to be on our radar today.
Okay, thank you so much for that, Gaurav. But let's go across to Sudarshan, who's going to tell us what are the cues that we should be watching out in the world of F&O. Good morning, Sudarshan. We have the GST Council meet. We have a lot of US economic data points and commentary that has come in. What is the indication for our F&O markets now?
So amid heavy domestic cues, we are seeing a range bound or say volatile day of trade. Yesterday also, till the first half, it looked like a very good day of trade. But by the close, again, we saw that Nifty Bank, all these major indices erasing their opening gains. And then it was in the red. And biggest culprit remains the financial space. All the major banking heavyweights, take it ICICI Bank, Kotak Mahindra Bank or HDFC Bank, all these stocks have erased gains and closed in the red. And that is the main reason that Nifty is failing to hold the level even of 24,600. For the Nifty Bank, 53,000 remains the very important support. And on the upside, until unless Nifty Bank crosses 55,000, return of buying looks very difficult. As far as today is concerned, GIFT Nifty so far is indicating a muted start once again. On the flows front also, FIs remain on the sell side. Yesterday also they have sold more than rupees 1100 crore, while DIs continue to buy. Yesterday they have bought more than rupees 2500 crore in the cash market. Even in the derivative market, FIs have sold more than rupees 1400 crore and they have reduced long positions of around 2400 contracts and added short positions of around 5,400 contracts, and FI's long exposure remains at multi-month lows, that is around 8%. On the option front, on the call side, 24,700, 24,600 call have seen biggest option build up, open interest build up, but again premium for both these strike rates have come down. But in contrary, on the put side, both 24,600, 24,500, even 24,400, all these have seen an increase in the premium with huge option build up. So support for Nifty, first support remains around 24,500, but if we fail to hold that level, next support comes around 24,430, resistance remains around 24,700. Two stocks that I have taken, first one is M&M, because yesterday we saw that there was some news about that GST on EV might be increased and all, but later we got the clarification that GST on EV will remain around 5%. And one more stock that is a Dabur, because FMCG stocks continue to see buying. Yesterday also Dabur was up around 4 to 5%.
Absolutely, Sudarshan. We'll surely be keeping an eye on all the stocks in the world of F&O as well. But let's talk about the two-day GST Council meet, right? Because we're seeing all these FMCG names, textile names that are buzzing in trade because of this possible cut that could come in. Now, obviously, the council is set to meet today. They're going to be discussing the centre's proposal for a simplified two-slab structure and Prime Minister Narendra Modi's vision in his Independence Day speech on the next generation of GST reforms could soon be a reality. Now, GST Council will discuss Centre's proposal to shift to that simplified two-slab structure, right? One is going to be 5%, other is going to be 18%, and with a special 40% rate for sin and demerit goods that could come in. Now, if approved, the move will make a wide range of common use items cheaper. So your daily necessities such as soap, shampoos, hair oil, toothpaste, biscuits, namkeens, bhujiyas, footwear, apparels below 2,500 rupees, along with ghee, butter, pencils and exercise books are expected to fall in that lower bracket of 5% range. Now, aspirational goods, when you'll talk about that, such as whether televisions, refrigerators, washing machines, microwaves, small cars, motorcycles that are below the 350cc, which are currently taxed at 28%, may move down to that 18% slab. Now, we spoke to Indian Hotels Marico to understand the impact of GST rate rationalization on these companies, what it will mean. Listen to what they had to say.
Absolutely, and I think that 7,500 ceiling was created 8 years ago. It's not been even adjusted for inflation. So I think given that the sector is the highest multiplicator of jobs, it is in the best interest of the nation to change that ceiling and bring it to the 5% bracket. So It's not an unreasonable request from our side, and I think let's see, time will tell if that change happens or not. But should that happen, yes, it will be extremely positive.
I think one of the things is rate rationalization is something which I think is a tremendous opportunity to drive consumption. And it is happening not only in consumer goods, it's expected in things like auto and durables, which will definitely catalyze. It's a very, very bold move by the government and the entire simplification and rationalization. It will definitely catalyze consumption in the country.
Okay, on that note, we're going to slip into a very short break. After the break, we'll get you the latest updates related to tariffs, so stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now let's focus and talk about what's the latest updates that's coming from Trump in terms of commentary as well. U.S. appeals court on Friday ruled Trump's tariff as illegal but allowed the tariff to remain in place through 14th of October. The president has said that his administration will ask the Supreme Court now for an expedited ruling on tariffs. Listen in.
You know, other countries use tariffs on us for years, and we never did. I did a lot during my first term, but then we had COVID and we had to focus on other things. You couldn't be tariffing Italy, Spain, France, as they were dying by the thousands and millions. It's a very important decision. And frankly, if they make the wrong decision, it would be a devastation for our country. We've taken in trillions of dollars. And by the way, all these countries signed agreements, as an example. They're all happy. Everybody's happy. But some whack job put in a lawsuit, and now it's going to the Supreme Court. Now, we're going to be asking for early admittance. We're going tomorrow, and we're going to ask for an expedited ruling because, you know, when you look at the stock market's down today, the stock market's down because of that, because the stock market needs the tariffs. They want the tariffs.
The US president also commented on the high tariffs imposed by India. He said that the two countries got along very well, but also listed why India has been being charged a high amount of the duty that we're seeing. Listen in.
Get along with India very well, but India has, you have to understand, for many years it was a one-sided relationship. Only now, since I came along, and because of the power that we have with tariffs, India was charging us tremendous tariffs, about the highest in the world. They were about the highest in the world, number one. And we, therefore, weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them. So they would send in massive, you know, everything they made, they'd send it in, pour it into our country. Therefore, it wouldn't be made here, you know, which is a negative. But we would not send in anything because they were charging us 100% tariffs. And, you know, I'll give you an example. Harley Davidson. Harley Davidson couldn't sell into India. There was a 200% tariff on a motorcycle. So what happens? Harley Davidson went to India and built a motorcycle plant. And now they don't have to pay tariffs. Same thing as us.
And moving on, and some commentary coming in from the domestic side on the ministry front, we had India is in dialogue with the US for bilateral trade agreement. That's a word coming in from Commerce Minister Piyush Goyal. He also hopes that things get back on track soon to conclude the bilateral trade agreement by fall or November. Listen in.
In every sense, one can see an excitement across the world to expand trading and business relations with India. We've had a little bit of a geopolitical issues overtaking trade issues in our negotiations with the United States of America. I do hope things will get back to track soon and we'll conclude a bilateral trade agreement by fall, November or so, as was discussed by our two leaders in February.
Okay, those are the comments coming in from Piyush Goyal. But let's look at how the U.S. market closed. Wall Street ended Tuesday's trading session lower. Investors were assessing the tariff concerns that were coming in. Dow, shed almost 250 points, while the S&P 500 lost 45 points in yesterday's trading session. The tech-heavy Nasdaq index also closed down 175 points. So there was some bit of a pressure that came in on that front, and that is why Nifty implied open is also indicating a negative start, given the cues overall from the Asian market opening as well as U.S. market is negative. But on that note, we're going to step into a very short break, and we'll get you the cues in the world of commodities after the break. Welcome back to Power Breakfast on CNBC TV 18. Now let's look at what's happening in the world of commodities. To give us the latest update on that front, we have Manisha Gupta joining in with us. Good morning, Manisha. And seems like that uncertainty around tariffs and the commentary that keeps coming in is keeping the gold on the higher end.
Oh, well, absolutely. It's a third day today that we're looking at gold prices trading at a new all-time highs. And this time around, we are trading very close to that $35-50 an ounce as well. So with that, gold is up by 35% in this year, well supported by a flight to safety, broader political and economic risks, and tariff-related uncertainty as well. And then there are expectations of a rate cut coming in the month of September that is almost baked into the prices right now. The dollar index, also trading at a 5-week close, has been supportive not just for gold, but for silver as well, which is now trading at a 14-year highs. Platinum prices have surged to almost 11-year highs. You have copper prices trading quite firm as well. And not just the metals. When you look at the crude oil prices, we are trading at a 1-month highs onto this one as well, backed by geopolitical tensions and supply concern support as well. Also, the markets are now assessing the fact that Ukraine drone attacks have shut down nearly 17% of Russia's refining capacity. So that premium seems to be building up in prices also.
Okay, Manisha, thank you so much for that. Surely important to keep an eye out on crude oil prices as well as gold. But let's move on. And as Beijing rolled out a massive parade to mark 80 years since the end of World War II, visuals from the parade show Chinese President Xi Jinping, Russian President Vladimir Putin, as well as North Korean leader Kim Jong-un together in the front line as the Chinese president leads the foreign leaders in the parade. Nearly 24 of foreign leaders attend the ceremony, looking to strengthen ties with Beijing amid the U.S. tariff tensions that are going on. A quick look at, the Asian markets, because we're seeing a correction coming in for the Hang Seng as well. Opened up with gains of 0.9%, and now just managing to hold on to gains, just mild positive that's coming in there. Taiwan index also just managing to hold on to gains of 0.3%. Keep an eye out on that. Cues for the Indian market not too positive. We're seeing Nifty implied open indicating a negative start as of now for the Indian markets. But that's all the time we have on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, Bazaar Morning Call.